This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, March 11th, 2016. Euro dollar. So a lot of choppy price action in the euro at the moment. The market putting in a violent bullish outside day on Thursday, taking out the previous 17 daily ranges. At this point, that bullish outside day could open the door for fresh upside towards the 2016 high at 113.77 further up, but it'll be interesting to see how things play out, with the market just as easily capable of stalling out as this choppy multi-week price action ensues and rolling back over to the downside. Right now, you want to pay attention to yesterday's high, that Thursday high, which comes in at about 112.18, 112.19, and the high that we saw going back to the 8th of March, which comes in at 110.58. So 110.58 and 112.20, let's say, are the key levels to watch above and below, waiting to see a break for clear directional insight. Sterling dollar. So cable continues with its recovery. It's been consolidating recent gains, but overall, the broader downtrend remains firmly intact, and the market is expected to put in a lower top ahead of a resumption of declines back down below the Thursday low, which comes in at 41.18, and towards the recent lows, that recent 7-year low at 138.36 further down. A break below 138.36 would then expose a measured move downside objective at 135, which also coincides with the multi-year base from 2009. At this point, only a close back above 134, a close back above 144 would take the immediate pressure off the downside. Dollar yen. So not a lot going on with dollar yen over the past several days, with the market confined to a bearish consolidation. If the market trades lower and takes out 110.98, which is critical multi-month support, this could open the door for the next major downside extension towards the 107 to 108 area further down. At the same time, a break back above previous support at 116 would take the immediate pressure off the downside. Euro Swiss. So Euro Swiss has been consolidating over the past few months, and the market is within a recovery structure and favors additional upside eventually above the recent multi-month high at 112 and towards 115 further up. Look for any setbacks to continue to be very well supported, with only a break back below the multi-week range low at 107.15 to compromise the constructive outlook. Aussie dollar. So Aussie continues to trade with a bid tone, though the market has run into some solid, formidable medium-term resistance around 75.30. If you look back to the July 2015 high at 75.29 and the recent high from this week, which comes in at 75.28, it's clear that the market is running into this solid resistance above 75. The market would therefore need to establish above 75.30 to open the door for fresh upside. Inability to do so will suggest that the market is poised for a broader resumption of declines and should roll back over eventually towards those recent multi-year lows at 68.27. For now, key support comes in by the Thursday low, which comes in at 74.27. Dollar CAD. So dollar CAD has seen an impressive correction following that January peak that from the near 13-year high at 146.90. The market's pulled all the way back some 10%, all the way down towards 132 now, but is expected to start to look for a higher low in favor of resumption of the broader bullish uptrend. At this point, the 32.30 level represents the 78.6 fib retracement off of the October low to January high move, and this is an ideal area for the market to start to consider the possibility of a higher low. Kiwi dollar. So Kiwi continues to be very well capped into rallies towards 69, and overall the broader bearish outlook remains intact, with setbacks favored below 65.46, which is classified as short-term support, exposing more medium-term support at 63.47 further down. Ultimately, any rally should continue to be very well capped, with only a break back above 69 to compromise this outlook. SPX 500. So the S&P 500 continues with its impressive correction, though as we now trade into this 2000 to 2025 area, the market will consider the possibility of carving out the next meaningful medium-term lower top in favor of a bearish resumption back down towards a retest of the recent multi-month lows at 1808, below which exposes a measured move towards 1600 further down. So while we have been trading with a bid tone and are all the way back up above 2000, overall following that breakdown that we saw earlier in 2015, the structure has now shifted to the downside and a medium-term lower top is favored. At this point, only a close back above 2025 would really compromise or delay this bearish outlook, this newly adopted bearish outlook. Gold. So gold has seen an impressive recovery over the past several weeks following that break above 1200, and the market is now focused on a retest of the 2015 high from January of 2015 at 1307. At this point, setbacks should be very well supported ahead of 1200, with only a break back below previous resistance turn support at 1192 to compromise the bullish outlook.